The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with us today. Good morning to our friends in the land down under, and good afternoon to the Shaky Isles. How's the volume? Can you hear us all right? Hello, Mick. Mick's with us, Mick D. Famous trader. Yeah, good. Thank you. You're right on it. Dave V. He's a tutorial guy as well. Great to have you with us. Boy, this webinar was well named, wasn't it? I said we're a bit overdue for a dose of violence, and then bang, here it is. Wonderful. So lots to talk about today. Let's see, we've got a big turn up today. It's pretty interesting times coming, folks. It's already started, hasn't it, Andrew? He's good to have you with us. Bob B, he's thinking of doing a tutorial. You should have done the tutorial by now, Bob. You'd have made a, well, pretty lazy $50,000 or $60,000 just on one contract in futures and forex this week. It's been enormous. Brian, great to have you with us. Carol, of course, a special welcome. Here we are. Colin's with us, of course. Dave, we said hello to him. And they're coming in pretty fast. Some of this is dodging around. If I miss you, forgive me. George, it's good to have you with us. Gig over in North Carolina. Particularly good to have you with us, Gig. You know all about trading time signals, don't you? They've really run the board, haven't they? Greg, you too. Greg in Colorado Springs. He's a wealth manager over there who's done a Daniel Code tutorial. So he knows all about trading time. Jean-Philippe, welcome. Jeff, he's a tutorial guy. Welcome to you, of course. The other Jeff, yeah, another Jeff. Joel from Vero Beach, of course. Hello, Joel. Good to have you with us. John down in Coffs Harbour. Good to have you with us, my friend. Mark, of course. The other Mark, and then Mark L, of course. He's Daniel Code tutorial guy. Told you all about him. Mick D. Murph, of course, can't start without Murph. Mike Olenek, good to have you with us. Mike, haven't seen you for a little while. Miles, of course. Ned. Rocky, yes, Rocky's thinking of doing a tutorial. You should have done it already, and you'd have made so much money. You'd be, I guess you wouldn't be here today. You'd be sitting in the Caribbean. And in fact, I'm amazed anyone's still here. The money that's been made, we've made this week, has just been absolutely phenomenal. Scott, great to have you with us. Sean, of course, he's a tutorial guy. Stephen, another Stephen. Famous Toddy, Todd number one, and Toddy over in Toddy T over in Southern California. Old friend, glad to have you with us. Trevor, of course. Vicky, welcome to you. And William, who will either be in Hawaii or California. Good to have you with us, my friend. Okay, well, so much to talk about, folks, isn't there? Absolutely, just been fantastic. Let's get on with it. So here we are. Markets are rational, orderly, and sometimes predictable. Kind of interesting, super interesting couple of days, because the US dollar has been controlling currencies, and currencies have been, a lot of them have been very dormant as the US dollar last couple of weeks made up its mind what it's going to do, and all of a sudden it's made up its mind, and whoosh, up it's gone, and it's absolutely, there is carnage in the currency markets, but of course currency markets also react like everything else. It's also happened to precious metals and copper. It's been fantastic, and of course that's violence. Large volatility brings violence. So particularly precious metals, US dollar index, euro, and the US Fed had its meeting this week, a scheduled meeting, and they sort of kind of hinted at they might raise interest rates sometime, maybe, we'll think about it. It's a bit of a joke what's going on in the Fed. They're really, at their previous meeting, they got to the stage of saying they were thinking about raising interest rates, but they were thinking about raising interest rates. I mean, it's all too silly. And what's happened today in the T-bonds is just so predictable to be hardly true. But the interesting thing is that once upon a time we would deliberately stand aside from trading when the Fed meetings were scheduled, and when the minutes of those Fed meetings were released in a couple of weeks. But so often we've found that the Fed goes with the Daniel Code, that we now actively trade through these things, and we expect that if the Fed makes any announcement of with any contentious points in it at all, it's simply going to move the market with the Daniel Code. And I've often said jokingly that the Fed gets the Daniel Code, so they know a couple of days before what the likely effect is, simply from the Daniel Code signals, as you would too. But it's a little bit different here. There's a lot of dramas going on in the options market. Some people in the options market have got it all terribly wrong. And tomorrow, tomorrow for you, today for me, is quad witching, and when that happens, we often expect more volatility, more violence, and so interesting that the Fed's comments have played absolute carnage with currency markets and precious metals, including copper, which is not a precious, semi-precious metal, but have had very, very little effect on the equities, which we're all focused on, except for one outlier, and I'm going to show you that as we go along. So let's keep with the program. So for those of you who don't know, quad witching is what the industry is quadruple witching. Quad witching is the abbreviation, and it's what the industry calls these particular dates. They happen 4 times a year when options and futures contracts expire at the same time, and that is happening on Friday. So have a look at this. This is so weird. This is what happened in the NASDAQ today. It had a DC target recognition pretty well perfectly, and that set up a Daniel Code time buy signal. Those of you who've learned about trading time, honestly, if you haven't already learned about trading time, for goodness sakes, get yourself organized, do a Daniel Code tutorial. You'll see as we go through today, these time signals are just absolutely fantastic, and as are our price signals, but you'll see that as well. But this is the NASDAQ. It went up. The chart at the bottom is the Dow. It went down. And you can see there's now a pretty significant divergence between the NASDAQ and all of the other indices. This is the Dow, but the Russell's also down. S&P is less than excited. But here you got this big spike up bar in the NASDAQ. My guess is that is purely related to options traders being on the wrong side of the trade, and they're using futures to try to close out their options position. We'll see tomorrow. But boy, that is standing out, screaming at you. So markets really profoundly hate 2 things: being in a substantial wrong position and surprise. When folks are substantially wrong, they finish up with margin calls, and I think a lot of the trading we've seen today is margin call related. But you might have another view of that after I've worked through what I'm going to show you. But that's the Fed, actually the US Federal Reserve, call it the Fed, it goes overboard to try and indicate its likely future path. It's trying to keep traders aware of its likely movements. And this week was really weird because at the Fed meeting, the announcement afterwards, 7 of the governors saw interest increases next year, interest rate increases. And boy, they might get it up to a whole 0.6%. I mean, that's really of interest only to the big banks. If you those sort of moves, they're more than technical. They're real for people who are heavily invested in government securities. But that modest interest rate, it wouldn't affect the average person. It'll affect really the banks and the big players. But the Fed has so many weapons, and of course, don't forget Treasury has the what euphemistically referred to by traders as the PPT, the Plunge Protection Team. Well, it's a bit more than the Plunge Protection Team, but it's real, and Treasury can deploy it at key times. And when you see the T-bonds chart today, if you haven't already, I mean, you should fall over laughing. It's so ridiculous. But anyway, it did what the Daniel Code said it would do. So one of the interesting things is that in the last few days, the markets have tended to ignore the Daniel Code price signals for probable turns, and it's quite noticeable that a lot of the signals that comply in their normal setup for a Daniel Code turn at a Daniel Code price signal, they were ignored, and that's a sign that the old trend is getting stronger. So Daniel Code price signals work on the market being in balance, and then our indicators tell us in advance when we're going to get a probable turn. But as that volatility increases, the old trend gets stronger. Markets aren't in balance, and they ignore the daily price signals. But of course, what they do is they never ignore the Daniel Code time signals. So you having a knowledge of how to trade both time and price makes you the complete trader, but it also gives you a whole lot more than that. People who know how to trade Daniel Code time signals have absolutely scooped the pool this week. They have good weeks pretty well all the time. If there's any volatility, it just gets better. So the question is now, if you were in these trades, folks, do you know how to protect those lovely profits? So you tutorial guys, make sure you're keeping an eye on that blue line. I mean the other blue line, the one that would say valid to exit or VTE for you, and you know what that rule is, so be aware of it. We're seeing plenty of it right now. So this is the UST bonds, and you can see this has been happily chirping away at the Daniel Code price signals and also the time signal. So we had a nice run up on a TO3 bar, TO3 buy that gave us a little curl at the bottom, which just 1-2. That's about the only part of Elliott wave that actually works. 1-2, and we see that often, and we know how to get back in on a Daniel Code. If you know how to trade, you know to get back in on outside bars. So we had a nice run up to the high, then we got a perfect TO3 and blue line sell signal right at that 159 correct 25 level. Interesting, you look at the next bar, the key reversal bar right at the top. It's opened at one of the blue lines. It's run up to the next blue line at 159 correct 29. Correct that little arrowhead you see. I was going to say old-fashioned. It's been around an awful long time. That's how all markets used to be priced that way, in eighths and fractions of the rule of eighths. Anyone who's done a Daniel Code tutorial knows where that's come from and how it's calculated. That was fine, and then it ran down until we got a TO3 and a Daniel Code time buy signal for today. So yesterday, all the talk was, how did someone know the Fed was going to announce that they were thinking about raising interest rates? That sent the market down from our TO3 and blue line sell, and today, that's the plunge protection team in action. Now, these charts that I'm showing you today have not been curated. In other words, you can see they've got masses of blue lines on them. Some of them have even more. And it's really interesting that with all of the volatility we've seen and the massive amount of movement that we've seen, how's that volatility affected what the Daniel Code does? Well, it's actually really, really interesting, and it's an important part of the Daniel Code, because when we get this sort of volatility, markets tend to go through support and resistance and not pay any attention to them at all. I'm talking about all the traditional support and resistance. Of course, not so with the Daniel code. The more volatility, the more accurate these Daniel code charts become. So you can see that that's a big bar up, courtesy of the PPT today. You can see it roared through a bunch of those blue lines, but look where it closed. The close, 159 correct 25. There's the blue line where it's closed, folks, 159 correct 25. That's been on your chart for weeks and weeks, and the Daniel code knows that. All markets are ruled by the Daniel code, even when you get something as strange as this, and the big run-up was because everyone was short this market. If they weren't already short, they tried to get short yesterday after the Fed announced they were thinking of raising interest rates. Yeah, Rolf, yeah, just absolutely enormous. Rolf from Melbourne's just joined us. Good to have you with us, my friend. Terrific. Yeah, and Tom, good. Anyway, so that's what happened yesterday. There was a scramble to get short after the Fed announcement. This market went down to its red line, 157.12, 157 correct 12. That was the low. Where was the Daniel code red line? 157 correct 12. Oh, really? I mean, that's been on there for days and days and days, that retracement, folks. And this market hit it with a fair bit of volatility, stopped exactly at the number, turned around, up it went, closed exactly on another Daniel code blue line. So that's what we call target recognition, and that's what goes on in the Daniel code all the time. It's not an occasional issue. That's pretty common. So there you are. That's obviously the Fed was worried about anyone thinking they dare to raise interest rates. So let's get the PPT and run it all up today. And that's, in fact, what happened. And, of course, wherever the magic was, it was the Daniel code magic. As you can see, the low was right at a Daniel code number, 0 variance. The close today from this massive, big, high volume, high volatility bar is right at a Daniel code number, no variance. Normally we expect variance to be no less than 1%, but often enough, as you can see, it's 0. This is the US dollar chart. Now let me say, please, if I may, before the smarties start, there always seems to be someone who says, after a webinar, your charts are showing the wrong numbers, or they didn't make that much money, or I missed the trade, whatever. I start doing these webinars for you the day before, and then I start again to prepare them for you at 5 a.m. my time. It's dark, and I'm sitting in a dark space, but it makes me happy to be doing anything concerned with Daniel code. But the bars that you see are downloaded before the close. So 5 a.m. my time, when I'm doing these for you, is 3 p.m. your time. So the markets haven't even closed. So sometimes these bars that you see on these charts are not absolutely at the closing price. So any variances you see there, forgive me, it won't be much and it's not meaningful. Have a look at this next chart. Who knew about this? On June the 9th, we had a TO3 buy signal. We had a little fake out, wake out with an outside bar. You should know by now about the mandatory stop and reverse when you get an outside bar on a new entry. And from then, of course, into today's close, it made $1,600. Now, this is a small dollar market. The margin of this market is only about $2,000. And this, I can tell you, is a huge move for the US dollar index. And it's pretty fantastic, isn't it? So let's see what happened here. The high of that bar, today's bar, again, amongst much volatility and excitement, that high is 91.995. Where's the Daniel code number? 91.990. and the 0.5 is actually 1 tick. So it's not 5 ticks away, it's 2.5 ticks away. The 0.5, the third decimal, is actually half of a tick, 1 tick, yeah. So look at that, how accurate. So who knew about this? I mean, there's your TO3 buy signal. There's deal with the little fake out, wake out on the outside bar. I mean, Fed's not supposed to know about the Daniel code, but this happens all the time, all the time, all the time. I mean, we've now, Daniel code started in late 2008. So, you know, we've been going for 13 years. And all of the charts show the same thing. Have a look at this. This is EUR-USD. This is one of those markets that hasn't really been latching onto its price signals as well as it normally would. But look what you got if you were trading time. You had 1, 2, 3, 4, 5 moves. All gave you something, not much. Now look what happened yesterday and today. Wonderful. Big numbers. And this is EUR-USD. I can tell you what the latest numbers are now, because of course I've now got end of day data, and this market closed at 1.9078. Okay, have a look at the Daniel code number, 1.9055. I've moved this back one, haven't I, the wrong way. This is the one we're looking at, 1.9055, and there was the close, just a handful of ticks away from it. Just amazing stuff, isn't it? So that's what you got if you were trading time. If you haven't learned to trade time, the only place you can learn is at the Daniel code, and it is totally unlike anyone else's understanding of time. And it's pretty fantastic. So the US dollar is really ruling these currencies. This is the Aussie US dollar, and it's been overbought for a very, very long time. But have a look what's happened in the last 2 or 3 days. If you had a Daniel code time cycle sell on the outside bar, which you can see started this rundown, you made a lot of money in this market. Okay, there we are, move on. So this is EUR-JPY, same thing, DC time signal 2 days ago, sell signal. All you guys who've done a tutorial, have a look at this, $1,800 straight down. Same thing, these charts are not curated. This is just the raw charts from Wednesday night of last week. So we'll see this, you'll see this cleaned up when I do the charts on the weekend. But I wanted you to see how extraordinarily accurate all of these numbers are. This is British pound, US dollar. Cable, this is called. It seems to be the. Someone told me once why the abbreviation for it is cable, British pound, US dollar. So you had 2 nice time signal sells in here, both pretty rewarding. Look where this momentum low came in. First it was stopped by the red bar, then it was stopped by the blue bar right down at 1.3894. Pretty fantastic stuff. GBP USD, I might need to look more closely at that. Here we are, GBP USD, yep. So the low was actually 1.3896 against the blue line of 1.3894, 2 ticks variance, and the close was a 1.3925. Have a look at the blue line just above it, 1.3927, 2 ticks variance, exactly the same variance. You see, that's how amazing these Daniel code numbers are. And this happens not now and then, not when I want to show it to you. It happens all the time, all the time. And if you'd like to check that out, any of you who are new to the Daniel code, at the website, www.thedanielcode.com, click on Chart Archives. There are over 40,000 charts. Someone will do an updated count for me and let me know. but I know that because one of my clients told me. Anyone who's got some spare time, who can do an update of all the charts on the chart archive. But this has been going on since day one of the Daniel Code, with this degree of specificity. I mean, maybe that's a word I shouldn't repeat again. What about accuracy seems to be the thing. Absolutely extraordinary. Here's your sell in the New Zealand dollar. This is the second part of it. You had a blue line sell right at the 7,320 high. And look where this thing's managed to get to today. Here it is. Here's its low. 0.6993 is the low. Look at the blue line, 0.6993. When I tell you that these Daniel Code charts get more accurate as volatility increases, as completely opposed to every other charting method, and look where it closed. Here's the close, 7009. Okay, there's the blue line, 7010, one tick variance. It's incredible. If you don't understand how extraordinary this is and how different this is to anything else you're going to see anywhere else, wow, you're really missing out on the plot there. What does Akshay say? The risk on, risk off currency signaling anything with. I'll come back to you, Akshay. I'll have to open anything with relation to equity markets. Well, there's a whole lot going on in the equity markets. As I showed you, you've got this total divergence between NASDAQ and everything else. That's what's really telling you something. And that's all going to resolve today after we've had quad witching. But here we are, New Zealand US dollar. Look where it closed. Look where the low was. Another Daniel Code time sell. Made $1,800 on that one. This is the loonie US dollar, Canadian dollar. Another time signal buy, $1,900 in 1, 2, 3, 4, 5, 6, 7 days. Just extraordinary stuff, isn't it? Look where the high was. USD CAD. So this is drama filled. This is violence. This is a market really, really getting pushed about, apparently. But that's how it appears to the uninitiated, or as I call them, the great unwashed. In fact, that's not what it's doing. If you look at the high of this bar, massive volume, massive volatility, lots of excitement, lots of panic, and the high, 1.2377. 1.2377. Have a look at the red line, the Daniel Code red line that stopped this bar. 1.2378. One tick variance. One tick, that's all. Absolutely extraordinary. Okay, let's move on. Perfectly nice stuff. Gold. You gold guys, you're probably contemplating suicide, most of you gold bugs. But don't. There's no reason to, because you were warned about this. And I'm going to show you why. We had a DC time sell and a TO3 plus sell at this most recent high that hit the 1906.6 black line. So we had a time sell and a price sell. Look what happened. $10,000 into today's close. More interesting is how did they manage what they did yesterday. Now have a look at yesterday's bar. That's a really big bar. That's a high volatility bar. Okay, just let me get with you. And they ran that thing down yesterday. It opened at 1861. It went all the way down to 1804 and then all the way back up. The buying power that took is absolutely massive. And why did it stop there? The low, in a very dramatic situation, 1804.4. Okay, where's the Daniel Code red line? 1804.3. 1/10 of 1 point in the midst of all that drama stopped it like a train. And then look what happened today. Whoosh, down she went. So you're sitting on a TO3 time, a TO3 plus sell signal, a Daniel Code time sell signal. The trade to today's close is worth $10,180 or thereabouts. And where was today's close? 1774.8. Okay. Have a look at the black line. It's a bit hidden because all the others are on top of it. 1774.7. One tick variance on that volatility. Can you imagine that? I mean, you expect to see crazy stuff. You see lots of comments today saying, "Oh, can you make out what's happening with the market? Are they crazy?" They're not crazy. They're working exactly and precisely off the Daniel code as they do all the time. So this does look to me a bit like a margin call, but there's a big but. If you got this trade wrong on gold, it's your own fault because you were warned. Okay, I hate saying that. It's a horrible thing to say, but the fourth seal is sitting there for your protection. This is what Frank DB said about gold on Monday. Gold is still in its downtrend after the turn. It needs to reverse here soon to reignite the uptrend. If not, this correction is going lower and will gain, or this correction going lower will gain traction. There is a 44 cycle low now running until June 21st. Gold needs to bottom here and turn up to get the trend line bullish again, all in one word. Frank DB is a Belgian gentleman. English is not his first language, and he does very, very well. We used to run spell check through all his stuff and correct it, but I like leaving it just the way it comes from Frank. These fourth seal commentary, these are gems. If you're not using this stuff, it's your own fault. And he goes on, the failure to do so will trigger a deeper move. The DC signals will guide us. Well, with that as the background, you knew what to expect. And this is what to expect. And there it is. I mean, this stuff is magic. Very few of you are subscribed to gold in the fourth seal. A whole lot of you are subscribed to equities. If you have any interest in gold and precious metals, you should be subscribed to the fourth seal on gold as well. It's absolutely fantastic, as you can see. And we were told that that was, have I gone the wrong way here? Here I am. That was Monday morning, Frank's comment, right up there near the high. Okay. Pretty amazing. You want to read it again? It's still in its downtrend after turn. It needs to reverse here, or the down going lower will gain traction. Okay. Gold needs to bottom here and turn up to get the trend bullish again. The failure to do so will trigger a deeper move. The DC signal will guide us. And there they were. Sell signal in time, sell signal in price. Fourth seal told you on Monday before it all started that if it moved lower, it was going to accelerate, and that's exactly what it's done. Extraordinary stuff, isn't it? Silver went the same way. DC time signal worth $10,000 per one contract, about the same dollar value as the sell in gold per one contract. Okay, pretty smart, isn't it? This was a huge high volatility move. Big gap, crashed down. What happened? What looks so extraordinary about that? Well, if you didn't know about the Daniel code, it would have looked extraordinary. If you did know about the Daniel code, the low was 2582. 2582. Have a look at the red line, folks. 2580. 2 points variance. That's all. That is all. Absolutely marvelous. Let's see what else we've got there for you. There it is. And what's the close? 2585. That's between the blue line at 2588 and the one below at 2580. So take the median, 2584, 1 point variance. Our next thing I wanted you to look at, I've already shown you the chart, but the T-bond chart still got me laughing. That was so obvious and so silly. This is copper, folks. DC time signal and a TO3 plus cell signal together. Wow. All there, sitting there smiling at you. Let's have a look at that. We can get a bit closer to it. Here we are. There we are here. And that little signal, there's where she closed today. Yep. Depends how you entered that trade, whether you've done a Daniel Code tutorial or not. If you're following the website signals, then we don't trade the highs and lows of the inside bar. We trade the highs or lows of the last bar that was not itself an inside bar. So if you're following the trade program on the Daniel Code website, you made $7,400 or thereabouts on that trade. And if you've done a Daniel Code tutorial, you got in a bit earlier, and you in fact made $8,050 per one contract on that trade. Okay, so where did it stop? There's its low, same thing as everything else, 415.45. 415.45, there's the blue line, 414.95. That's where the low came. Rallied a little bit, not too much. Closed at 417.80, just up above that, near the blue line it's on. Wonderful stuff, isn't it? Big lot of money, $10,000 per one contract. Yeah, 8,000 at least, I should say. Sorry, $8,050 per one contract. You're rolling in it, aren't you? If you knew about it. This is interesting. What's been happening in beans. This is has not got today's bar on it. This was done last night. And these are the Daniel Code price signals, and they've been quite extraordinary. So run your eye through those signals starting from the left. TO3 plus buy signal, a TO3 sell signal to push it down, a failure at the outside bar, which is very small, it's always less than 50% of average true range, which we're going to talk about, then down into a TO3 buy signal straight forward, straight up $1,600, straight down today, TO3 plus sell signal, and followed by a Daniel Code time signal. Now look at the difference. They're the Daniel Code price signals. This is same thing. Daniel Code's got updated to today on Daniel Code time signals. Time signal at the high also had a price signal there. Time signal at the little 1 bar counter trend also had a price signal there. And this has been absolutely fabulous, this market. $9,550 in the current trade. Let me go back. I'll just move my cursors apart from each other. $9,550 per one contract. Look where it all happened today. The close today in a really big, exciting momentum bar. The close 1252 carat 6. Okay, 1253 is the Daniel Code blue line. 1253 is also a Daniel Code red line. The difference between 1252 carat 6 and 1253 is 1 tick. Okay, 1 tick variance with all of that volatility. I keep saying this because no one's more amazed by this stuff than I am, and I invented it. But it's what I live for, to just see this happening again and again and again, in fact, all the time, all day, every day, quite literally. It's extraordinary. And the more volatility there is, the better we like it, don't we? So there was your soybean trade, and you got it both ways. If you were only following price, you got the sell signal, and if you're following time, you got the lot. All right, let's see what else we've got to talk about. So the thing about violence is it comes suddenly, and it comes because of one of those two reasons. Either the market is surprised, which it hates, or someone with a very substantial position, or maybe the plural of someone, many people with substantial positions, they're in wrong. And when that happens and they're scrambling to get out, that's what brings volatility, and it's the volatility that creates violence. This is the S&P EMini, and this is the memorable piece of trading that we had in February, March 2020. And you'll see how simply this finished rolling out. We had a TO3 sell signal, and I think it was probably a blue line signal as well. The blue line was up there at 33.80, and it certainly was a TO3 sell signal. Down it went, hit some resistance, which created the TO3 plus buy signal, rallied 1, 2, 3.5 days, or 4 if you like, and the TO3 plus sell signal got you short again, right down into the bottom. 1 bar before the bottom, you had a counter trend outside bar that failed. And then you're down into the bottom, into a TO3 buy signal, where that it's just, the blue line is just off the chart a bit. I do apologize, but it was close enough to exact. You can be sure of that. We made something like $42,000 per one contract on this trade alone, and there's violence. And when you look at it, you say, wow, that's fantastic. That's a lot of money. Well, the whole thing about trading is it is similar to long distance yacht racing, and I'm talking about ocean racing, Sydney to Hobart, LA to Hawaii, that sort of yacht racing. And because you're at the whim and mercy of the winds and the weather, you have long periods of pretty nice sailing. You then get periods of complete boredom when the wind drops and you're just sitting there, and that can go on for hours and hours, sometimes days. Then, of course, that's often followed by periods of sheer terror as the violence comes in, but it's the violence that makes you the money. This trade is going to look scary when you see what the risk on entry was for all of them. It looks simple enough, but it's not. And when this violence starts, and it started already in some of these markets, you need to know how to handle them. So violent moves are precious. Yes, they're precious. This is what puts the cream. This is what puts the cream on top of the pie. As I say, you look what's been happening in forex and currencies. Markets have been very, very flat, no great impulse for a couple of weeks. Now all of a sudden you've got the violence, and you make the huge money. You have to be able to survive the dormancy. You have to be able to survive the boredom. You have to hold your nerve. You have to hold your self-discipline. Biggest thing that you need in trading, really, is self-discipline, and stick to the rules, and you'll see what it is. So have a look at this. Your TO3 sell signal rushed down, and it made $18,000 on the way down. You got your TO3 plus buy signal. Market went up, then sideways for 4 days. You made $400 on that little rally, and then the next rally down before we hit that outside bar was another almost $27,000. A lot of money, isn't it? Outside bar, you finished up short at the close of that outside bar, and you'll close into the bottom day with a TO3 buy signal. Just beautiful stuff. Stopped like it was shot. Reversed up it went. First little rally up, $5,900, nearly $6,000. Tons of money. Look what's hidden inside that. What happens when there's violence and volatility is the risk on entry gets scary. Have a look at some of these trades that I've showed you. The risk on entry, if you were buying the high, stop under the low of the setup bar. This is on daily charts, S&P EMini. The risk on that first rally from the TO3 plus buy signal was $7,000. Okay. Then from the little couple of inside bars there to the next sell, the TO3 plus sell, the risk on entry was $7,200. Get down to the bottom of the trade, the buy signal from the inside bar that finished up failing on the outside bar was $9,300. The last buy, the buy from right from the bottom there, you can see that number now, 2173 was the blue line trade there, TO3 buy. If you took that, if you bought the high, stop below the low, the risk was $10,000, and you can't do it because the whole of trading revolves, or our sort of trading, revolves on consistent results over a period of time. And that's why your risk on entry becomes so important, and you've got to know how to do it. So this is how you do it. If you look down, this is the same chart. I've just added to it the failure point there. But have a look at what's happening in this blue line on the bottom. This is the average true range. Now, you should have that on your chart. Every charting program's got it. You can use any time period you like. This chart at the moment is using 59 days as its length of time. I used to use 225 days. Really, really slow stuff. But when you look at the size of these bars, and you see the way the average daily range has exploded, you've got to be aware of that and know how to handle it. So this is what happens. So ATR stands for average true range. And you can see at various times as we move along, reading the chart from left to right, the ATR before we got to our TO3 sell signal, which triggered the whole thing. This was the COVID matters crash, wasn't it? We'd had all the news out about COVID for months, many months, and it was like, oh, who cares? Doesn't mean anything. And all of a sudden, it broke out, I think, in Italy very, very badly. And all of a sudden, the market thought, oh, gee, this COVID stuff might be a problem. And that's what this mini flash crash was about. In fact, it's a famous flash crash. It's famous for being the shortest bear market in history, 23 days. And a genuine, meant the 20% retracement for a bear market. So it looked like that. It wasn't, in fact. It was just being ruled by the Daniel Code. You can see where it finished exactly at a Daniel Code blue line. So reading across this chart left to right, back in February, the average true range was about 29.33 points. So say $1,460 US dollars. Then it started to rise very slowly, because it is delayed. Don't forget, it's delayed because the average is 59 days. So this only took 23 days to drop from high to low. So part of the average that's in this calculation of 59 days is well before this market started to roll over. So the average true range by that time had got to about 3,900. And if we get to the stage where the final one, which is in March 2020, maybe March 24, 25, the crash is over, the market's rallied, but look what's happening to your average true range if you're using a 59-day period. It's still rising. And at that stage, the average true range is about $6,500. And in reality, it's nothing like it. It's just what happens from using mathematical tools. They will always give you the perfect answer, but they're going to give you the perfect answer to the question you ask them. And at this stage, we're asking them to give us an average true range over the previous 25 days. Now remember, the crash itself was only 23 days. So by the time you move up well past the crash, it's now incorporating all of the 23 days and another 20-odd days plus of the rally bars, which were substantially smaller. So what's the answer? If you're talking about trading in really violent conditions, as we saw then, as we've seen in currencies, precious metals and copper and other markets, beans and what have you, absolutely today, you've got to have another indicator on your chart. And right at the bottom, it's the same thing, excuse me, average true range, but this one I've set at 7, which is the default setting that comes off Trade Navigator. You can make it as long or short as you like. You can use any of the Daniel Code numbers, or you can use the default numbers. It doesn't matter. It does the same thing. And what's happening now is you can see that the average true range has roared up as the market's falling down. It's roared up, it's made its peak pretty much right at that close, and it started to ease off pretty dramatically. So what I've done is I've shown you what the average true range on the bottom market, that's the 7 market, the 7-day average true range, by the time we got to March, a 7-day one average true range was about $3,700. Using a longer period, 59 day was still giving you $6,500 all the way there. So be aware that average true range is your protection. The whole basis of your profitability is based on having roughly, and I mean very roughly, the same risk all the time. If you get bars that are way outside your average true range, then you should use your ATR or a multiple of it as a stop. And if the bars are too big for you for your entry, take the entry anyway. Put on one ATR, one average true range, one period average true range, and make that a fixed dollar stop. If it gets really big and exciting, you can start to trail a 1 or at the absolute most 1.5 times ATR, and that will keep you in the market, and it will also protect you against violent kickback. So think that through carefully. It's very important because we've already got volatility blaring away at us today, and I suspect that there's maybe more to come tomorrow and then next week. So let's see what happens from there. So your risk management is everything, and a knowledge of the probable trend from just a single bar, one bar, that's the skill you need to have. That's the precursor of this skill. And it's not always right, but it's a very, very high probability. And we are going to have more volatility and violence shortly. So if in doubt, if you're new to trading, stay out. Or better still, do the Daniel Code tutorial and learn to trade all markets and stay in them so you can make the big bucks when that comes along and happens to you. So stop loss management really, I should start all tutorials by saying think about your stop loss management rather than mentioning it near the end. But it's one of the great things about futures trading and forex trading, that you can manage your risk with your stop loss. It's such a vital part of trading that you don't throw it away. So what's the big question now? Well, we've all been like on edge, like cat on the hot tin roof. God bless Marilyn. But we have been expecting some drama in equities, and we haven't got it. We had it right at that first near first slide, right at the beginning I showed you. The Nasdaq actually managed to rally today against every other one of the equities markets, showing at least weakness. So what happens now? If you look at the S&P EMini, we've got exactly the same profile as when I talked to you the last 2 weeks ago. That we've had a Daniel Code sell signal, time signal, and price signal elected. The market's gone down a couple of days. It's put in a key reversal bar today, key reversal up. And you remember me saying to you 2 weeks ago, that's a fortnight, 2 weeks, a fortnight. Jeff knows over in Colorado Springs knows about this, or his son does at least. A fortnight is 2 weeks, folks. It means 14 nights. It's an old expression, English expression originally that we used a lot. I use it often. A fortnight is 2 weeks. So a fortnight ago at that last webinar, we had exactly this same pattern in the S&P. Couple of days down into a key reversal bar, and I said then Thursday is the most bullish day, most bearish, I should say, day of the week, the best selling day of the week for the S&P, and Friday has a very, very strong rally habit. It's biased for Friday is always up, and what we see tonight, today's trading, tonight for me, tomorrow for you, I think is going to be vital as to what the outcomes of equities are. Are they going to follow the NASDAQ up, or has there been enough internal damage done by the US dollar's rally and that some of the Daniel Code forecast starts to bite? So be really on your toes for tomorrow's trading, folks. It's very important. Interesting enough, we have some DC buy signals in equities for tomorrow. And I would dearly love to see them not elected, but we'll just have to see what's happened from that. So all of this stuff is what I teach you at Daniel Code Tutorials. Everything I know, I teach you. And once you know how to trade, well, if today doesn't convince you to learn to trade properly, price, and probably more importantly, learn to trade Daniel Code time signals, learn how to create them and trade them. If today doesn't convince you, probably nothing will. There was a lot of money made today's trading and yesterday's, and the time signals have just been fantastic. So please, I ask you, if you want seriously to be a good trader, do a Daniel Code tutorial. Just send me an email, jneedham@thedanielcode.com. And I will send you some documentation. I've had a few of you ask for documentation and then haven't heard any more of you. So that might be because of the cost, which is $7,500. It's a lot of money, but you made that in about 2 trades today, even less, 1. Soybeans trade alone paid for that and made a profit for you. So do let me know if you do want to do a Daniel Code tutorial. I can call you if you like. Let me know where you live if you ask me to call you, so I don't wake you up in the middle of the night. And apart from that, that's what you should be doing. Remember, the business of trading is making money, and this week has just been an absolute money machine. If you haven't already, you're most welcome to have a free trial. Go to www.thedanielcode.com. Just click the free trial button. That should hit the register button. That should take you through it all. Any issues, particularly if you've already done a free trial at some previous time, the computer's going to query that, and you'll need you won't be able to use the same username. Any of those sorts of issues, it's not a big deal. Just contact Terry at support@thedanielcode.com. He's our super IT guru. He'll fix that up for you in a flash. Be most careful, folks, to read the warnings about trading. If you don't know how to trade properly, I beg of you, don't risk real money. I know you all think you can learn to do this from the internet. You may be able to, but I haven't been able to. I can't. I've never met anyone who was a seriously good trader who learned it from the internet. It's the one thing you really can't do at the internet. You need to be taught this stuff, and if you're not convinced or comfortable that you're a competent trader, you will lose your money very, very, very quickly. Okay, so let's have a look here. We've got a few interesting questions to deal with here. So Akshay, I think tonight's going to tell us about the risk on off in equities. And Brian says he subscribed to the fourth seal. Has the S&P given a daily sell? Let me open this up. I'm subscribed to the fourth seal. The S&P given a daily sell signal yet? Really, Brian? You should be subscribed to the TO3 plus signals. And yes, of course, it's given a sell signal. We had a sell signal for Tuesday, and we've been short the S&P for the last 2 days. The Russell, we had a sell signal, another sell signal, blue line reversal, a key reversal bar at a blue line. Pretty fancy sort of a signal, isn't it? That was on Monday. We've been short that market for 4 days. Do excuse me. TO3 plus, you should be subscribed to, Brian, to see the signals. Here we are. Dave has left, but he says, do you have a chart? I don't know what that means. Murph, great day, enjoyed it. You beauty, good on you, mate. I'm glad it. You did gig, get the tutorial, it's worth it, says our friend Gig from North Carolina, who's just finished doing a tutorial. Okay, thoughts on the fourth seal for S&P from Ben? Well, that's what we're waiting on now, mate. You know what the outlook has been, and we're waiting to see what happens. And I think you'll have great clarity, Ben, after tomorrow's trading. If that rally in the NASDAQ is more than just a balancing a rally for options people are in the wrong way, then we'll be really interested to see what it is. And lots and lots of volatility around. Make sure you know what you're doing, folks. It's easy to lose money. Okay, John. Yeah, Mike, quite right. New Zealand Aussie tutorial bubble. Well, we're doing tutorials by video now. Mike, quite a few of the Kiwis have done them. So we do them on a program called GoToMeeting. It's very similar to this program. It's owned by the same company. And we can do a tutorial for you in New Zealand or anywhere else in the world whenever you want it. Just let me know. Okay. All right. There we are. Okay, glad you enjoyed it, folks. That's us for today. Watch closely. Be on your absolute alert. I think things are going to start happening. Well, enough things have happened today. I've only spent the whole day, well, I've spent an hour of the day showing them to you. I think the equities position is likely to resolve in the next 24 hours. Enjoy your weekend, folks. Let me know if there's anything in particular. Thanks, Mark, from you. Thanks, and Steve also. Glad you enjoyed it, folks. I really enjoyed doing these with you. Anything particular you want me to talk about, add a tutorial, just send me an email and give me a little bit of time to get that prepared. Rolf, glad you enjoyed it. Well done, my friend. Good to have you with us here. So that's it, folks. I'm off the clock. Enjoy tomorrow's trading. I think it's going to be violent, and I think it's going to show us the answer to a number of outstanding questions. All the best for now, and bye-bye. Thank you, Martin. You too, my friend. Bye.